Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade show for April 26, 2022. We are recording this at 4 p.m. Eastern Time, and this is episode number 193. My name is David Kosmeter. I'm the creator of Timing Research, and today we will be discussing your trade ideas. So I've arranged for Melissa Armo to join us again, and you should be seeing her screen right now. And the option professor is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, great. Big day today in the market, so we're going to have a lot to talk about. I see from the list we've got a lot of diverse stocks to talk about, which is great. Different industry groups and things like that. But we've got a lot to cover. So Melissa, if you would be kind enough to just introduce yourself and also what you're doing at your company briefly, and then we'll start in on these stocks that are listed here.
Sure. My name is Melissa Armo, and I own the stock Swoosh, which is a company that I founded about 10 years ago. And I teach people how to trade my method that I developed on gaps. So I trade only gaps, and I'm mostly short. So obviously with the market sell-off today, and really since the beginning of this year, we've had a fantastic year. So I started out, when I first was trading, I made a lot of money once in a short, and I said, well, there's got to be something to this. And then I decided to focus on the short side. While I do go long, I mostly prefer to short. And I find that a lot of traders struggle with shorting. So I've kind of created a niche for myself to short. And again, this has been a nice market to do that in.
No doubt about it. And it's actually trending lower, which makes it even easier to catch the shorts. In other words, you know, the overall trend has been pretty much down. So when these things rally, you know, and you have your indicators. Now, you were saying something about you use gaps, is it? Or how do you?
Well, I look at a gap. I rate the gap, which is what I teach in my class. And then I decide if it's a good short or a good long. For example.
So when you're just understanding one thing at a time, GAP, you're looking for a gap. So things that gap down, go down, basically, is your theory?
Yes.
Yeah, that's not a bad theory.
Yeah, exactly. But not everything that gaps down can you short. Not everything that gaps up can you go long, just like not everything that gaps down, quote unquote, fills the gap, even though a lot of people do that as well. I find that consistently that does not work. So if I rate something and it doesn't rate, then it gaps down and it's lower to short, then I won't do it. I won't flip it, and I won't go long it. But that's just something just to give you a little bit of an idea of what I do.
And on risk management, are you more using stops on it, or are you more using just a get out point mentally, or are you using an option strategy, or what type of, shall we say, risk management do you use when you do these type of things?
Well, I have a day trading room where I day trade equities on margin, and I do call the stops in the room, and I do use stops and I put them in because those trades are on margin. You got to be in and out the same day, and usually we're in and out in a few minutes. I do options as well. I have a newsletter. That's different. My money management and options is I let every single trade play out, because essentially the amount that you risk is your stop. You can't lose more than you have at risk. In other words, I don't kill a trade right in the middle of the trade. When I'm in an option, I don't kill it. So I let it play out. It either wins or it loses.
And with regards to margins, they mark to the market at the end of the day. So carrying it overnight is a big issue sometimes, right?
Well, it's not big to carry an option overnight. What do you mean? I don't carry.
No, I'm talking about. I thought if like you actually shorted the actual stock.
I do short the stock on margin as a day trade, but I'm flat every day by 4.
Right, because if you carried it overnight, it might have certain ramifications or whatever. Right?
Well, yeah, I don't do that. That's to me.
Plus it could gap the other way on you, something like that, right?
Exactly.
Yeah. All right, well, let's get into this stuff here. The first one is CHWY, and I'm sure CHWY is probably getting chewed up. So people are probably trying to figure out if there's an end to the story. How do you think CHWY looks?
I have not looked at CHWY in a while. I will say one thing again,
because it had its day a long time ago, right?
Yeah, well, I mean, this had a rally up, you know, in 2020. And it was one of the things that did rally when the market fell off. This rallied and made new highs in 2020 as a new issue. Because remember, it first came out in June of 2019. I typically do not trade anything that doesn't have a 1-year history. This does have at least a 1-year history. But this, I don't know when earnings are on this, but this hasn't seen new highs since more than a year ago. So again, could this make a turnaround? Possibly. But right now, it's obviously trending down. And despite the fact that the market has been selling off, this really didn't look good in 2021. in the summer and fall of 2021 when the market was breaking out and making new highs almost every week. So I would say if people are looking to go long CHWY, I wouldn't do it right here. You got to wait until the next earnings and see again how it gaps.
Yeah, it's the poster child of catching a falling knife, huh?
Yeah.
With regards to your approach, can you take your approach and say, well, like in other words, it looks like on the screen on the top left, the 15-minute, it looks like the red bar would have been kind of the deal telling you to get short the thing. I mean, is that kind of, can you give an idea of how your signals?
CHWY didn't really gap today. I mean, It fell today with the market, but this was just open neutral. Again, most things gap with the market or move with the market on any given day. That's just reality. Like I don't even know what rally today with the market falling, but this closed the day before at 34.66 and boom, opened today at 34.57. So this is neutral. So no, I wouldn't have shorted this today unless I was just desperate for a short, looking to do something with the market. But there were a lot better things to do today. But this didn't really gap.
This wouldn't have fit into your parameters.
No, but it fell because the market fell.
Oh, yeah. And listen, and if you're using a simple parameter of a 10-day moving average, you would be selling this thing all night long. But in your particular approach, it didn't fit the parameters. So you could look elsewhere.
Yeah.
I'm with you. And so your opinion on this is essentially that it's too early to think about just sticking your head in a buzzsaw?
I've never heard that expression. I have no idea what that means. If you mean going long, I would not go long this. And as far as shorting it, you have to wait for the right setup, which in this case here, I would wait until earnings because it's earnings season and we're just at the beginning of earnings season. And most of these companies report towards the end. This is probably, I'm guessing, at some point mid-May. I'd have to look it up, but this is not an early one. You have all the big ones at the beginning. Like tonight is Google. In fact, if you want to look at a live gap, we could just talk about this. This is a live gap happening right now. The stock's selling off after hours. I don't trade in the post market or the pre-market. I wait until I see the gap. This could be something dramatically different by tomorrow because Google moves crazy. This could be up tomorrow, down further, who knows? But right now, this is really crashing.
I think looking for a big rally with something like that, it's looking like you're waiting for Godot or something, right?
Well, this closed today at 23.90, and it's right now. You can see the price is 22.45-ish.
Yeah, they announced their earnings. Apparently, they weren't well received, right?
Yeah. Well, I don't know what they said because I'm here talking to you, but this is a very large gap down. It's 150 points for Google, and similar to Netflix, which had its earnings, these things are getting clobbered. Some of these big stocks. In fact, let's look at the market and see how it's affecting the Qs right now. I mean, we're way down here. We fell today on the day, but we're
these were the things holding the thing up. So this is the last bar stool to lose the leg, you know?
Yeah.
Is Microsoft out yet? MSFT? Because if that one's down, then Katie, bar the door here.
Let me look and see what this is doing.
Says last trade is down $16, so that doesn't sound good. So people are thinking that we could go down toward 4,000 on the S&P. Obviously, that looks pretty reasonable. Now the question is, are we going to go to 3,600 or something like that?
I think this is taking a while to load because I have the Zoom.
Oh, you want to jump over to the list then? Let's jump over to the list.
Yeah, sure.
Looks like a nightmare list right now. Netflix.
So yeah, Microsoft is selling off right now as we speak. Here, just loaded. Netflix had the drop, had the fall. Again, had the earnings here already. We did short this in the earnings, came down. Again, even though Google was out tonight and it's slower, to take a new trade in this or to do anything here, Apple reports Thursday night. And again, that could affect the Netflix along with the Q. So if Apple is a good earnings, you can't like short Netflix tomorrow on Wednesday and then have to contend with Apple, which would be Thursday night into Friday. So I'm looking for individual things right now to trade. I wouldn't jump into Netflix right now in either direction. Now, if this ends up rallying and Apple's up on Thursday night and this rallies, I still think this is a long way to go to be a long again, because it's had a disastrous year, not just the earnings that we saw back at the end of April, but the ones that we had at the end of January into February, which was the first earnings. I mean, this stock, if you look at it, the first day of the year was 1/3/2022. The stock was at 605.61. It's at 198.
Right.
That's terrible.
So in other words, when people are looking at something like this, to the naked eye, it may look like it's low price, but you're saying let's wait for some type of a formation that would indicate a turn has occurred, because otherwise you're just jumping in front of a freight train.
Right. I mean, what I do with the gaps is trade momentum. So again, there's nothing to tell you while this very well could rally. Like I said, it may rally Friday with Apple being, if Apple is up Thursday night. The fact is that would be a one-off if you even wanted to do it as a day trade where you're in and out quick. Because right now the momentum to this is to the downside. The momentum in this is to the upside. So again, I don't buy dips in things, and I know traders tend to do that, but that's why many traders lose as well. Many retail traders buy dips, and they did that in 2021, and it worked because the market power trended and made a million new highs all year. So buying dips worked a lot in 2021 in stocks and downtrends, in stocks and uptrends. That is not working since the beginning of the year, and that's one of the reasons why traders are struggling this year. So, and I think they're going to continue to struggle. And you saw the way that the market bounced yesterday, rallied, and people piled in, piled into it, went long into the support, and it didn't last. It didn't even last for a millisecond.
Yeah. It's like they've been hit with a fire hose, and every time the fire hose takes a break, they think the fire hose is not coming back. And in this case, it keeps coming back. You know what I mean?
Well, that's because people's idea concept, again, most people that trade prefer to go long. I don't, but most people do, because the concept of buying low and selling high is something that people can wrap their head around. But the concept of shorting is really very easy. It's basically betting that something will drop. So, I mean, that's really an easy concept. It's just people think, oh, Warren Buffett, buy low, sell high, but people aren't billionaires like Warren Buffett. It can't buy a stock and wait until it drops, and turns around again, because eventually you will lose money, have a margin call, or whatever the case may be. Normal retail traders should just take trades with momentum and get out quick. And you can do that with size, and you can do that in options too, even overnight. But to do it just buying every single dip, you're going to get killed. And I think that that's what's been happening to people this year. And I know that just from talking to people that have come to me and asked about my course, because they don't understand why what they did all last year for 12 solid months now is not working for 4 months.
But they probably haven't been listening that we've gone to a withdrawing liquidity scenario from the Fed, because that's basically at the heart of all this.
Well, that plus, I mean, there's so many reasons. I don't follow fundamentals. I talk about them on TV when I have to find out what's going on. But the reality is that the Fed has been wrong about really everything they've said for the last 2 years. They thought that inflation would be temporary in 2021 at the beginning of the year. That wasn't true. They're still saying they're going to get back to 2% inflation by the end of the year. And they think that raising rates is going to make that happen. In fact, I believe that raising rates, if you want to talk about fundamentals, will actually hinder the overall market, will make the situation worse, because raising rates is going to slow down the economy and probably push us into a recession, because it's too late now to raise rates. Even if they raise them 0.5%, which they're talking about doing a couple of times this year, it's just too late. We're having issues with supply chain issues, and raising rates isn't going to help that issue. Plus, you have a lot of people that have left the workforce, even though they say the unemployment rate's under 4%. It's a skewed number, because the fact is a lot of people just aren't working. They decided to leave the workforce in 2020 and 2021. And then the stimulus, like you're talking about, has hurt the situation even more.
And again, going from a valuation of 22 PE down to a 16 PE really means that even when the companies are making money, the stocks still go down. Two things that hits me as I'm listening to you is, you basically like to go with the momentum, and you definitely want to keep things on a fairly short leash. Would you say that's pretty accurate?
Yeah, because just think about it. If I asked you what you're having for dinner tonight, you could probably tell me. If I asked you what you're having for dinner May 31st, you would have no idea what to tell me. So it's a lot easier to determine the short term, what's going to happen in the next couple of minutes, the next couple seconds of the next hour in the market, or the next day, or between now and Friday. if you're doing an option, rather than telling me what's going to happen in 6 weeks from now, or in 6 months from now, or saying who's going to win the presidential election in 2024, where you don't even know who's running. These are the types of things when you're an active trader. Again, you have limited funds. Even if you have, $500,000 in an account, that's it. That's all you got.
Right.
You have to take what you have and you have to make it work for you, and you have to turn it around over and over and over and over as many times as you can. And if you're in stuff and holding stuff, you're waiting for it to go. That money's being tied up, that you can't use it to trade. Remember, trading is not investing. Investing is investing. Trading is something different. And again, if you want to invest long term, I don't have a problem with you dipping your toe in the water at some point if we get a sell-off in the market, but that's not even here, because like you were saying earlier, we could go so much lower than people even think. Yes, we could go to 400
about it.
plus
People are walking around out there. Yeah, people are walking around out there. They have no idea that the winds of change are changing the valuation. It's almost like they're familiar with real estate, so they understand square foot. Sometimes you'll get 1,000 square foot on your property, and sometimes you'll get 800, and that's what makes the prices change.
Well, that's another thing that's going to probably come to a head as well with rising interest rates is the housing market. One, costs for builders have gone up dramatically. Two, a lot of builders have lines of credits. Those rates are going to be increased for the construction. And three, people aren't going to be able to borrow as much who want to go out and borrow because interest rates have gone up. So
now, whether it's leasing a car or a house, a lot of it comes down to what the monthly payment is, and the monthly payment's going up about 50%. And so using common sense, that's going to squeeze the buyer.
Yeah.
And the home sales are down. All right, let's go to the next one, which is the nightmare on Elm Street today is Microsoft. Obviously a great company, all that cloud business, but apparently they're trying to take some air out of it, but at some point it might be a good value.
Well, now this is up. This is up right now. Again, this is gapping up as we're talking right here. So you have a dichotomy that's going to happen now in the market tomorrow. It will be interesting to see where the Qs open. So Google reported crashed. We'll just look at where that is, 2290. The Qs were down with that, but now they're pulling up slightly because Microsoft here is up. So Microsoft is actually gapping up. And like you said, Microsoft is a strong company. Now I'd like to see this well over where it is right now. It's trading right now around 272-ish. So it's up about $2 since the close. But I think this really has to be well over 285, 290 for me to look to get in anything long with this tomorrow. So even again, this is kind of doing the opposite of Google, which is affecting the Qs. So it'll be interesting to see where the overall market, because the Microsoft goes with the Qs, just like Google, to see where this goes tomorrow. But right now, this is reporting and this is up. It's at 273 now, 273.25. Yeah, here it goes. So who knows? This could be a 280 tomorrow morning. Could be a 280 in the next hour.
Again, they probably are on the call now, and on the call they're explaining how wonderful things are going to be.
Yep. If this is sold off with the market, but this is in an uptrend, and actually the overall market's still in an uptrend too, despite the fact that it's selling off. So but again, if you're going to buy something, you want to buy something that is strong, and you want to buy it at a good placement. The entry is very important if you're an individual trader, because again, you can't wait forever for something to turn your way. And in options, if you're doing options, even if you're holding overnight, you got to get the timing right. It's got to go in the time that you do it. And the longer you take it out, you're just paying up for it, then the bigger it has to go.
Yeah, the bigger moving averages that I watch, S&P 36, 3,800, that's basically the bottom. So if you got underneath there, that would be, a little bit scary. But this stuff here is just really backing up and correcting type stuff. What about the semis? We got MU and Micron Technology, and that was kind of doing well, but then it kind of fell off the bed. So
yeah, this was up at the beginning of the year. Again, made new highs beginning of the year 2022. It's strong. Just like NVIDIA looked really a lot different than it does right now as well. So NVIDIA and MU are still two very strong stocks in the same sector. I don't know when the earnings are out for this one, but again, that's something you want to wait for the earnings, because they're going to be in the next 2 to 3 weeks, I'm sure, for this one as well. This will depend on what the overall market does tomorrow. Again, it's trying to hold a certain level, but without the market, nothing holds. That's the problem. So even this is down tonight because the Qs are down right now. So this closed at 67.08. This is gapping down now about $1 again, because the market's selling off right now.
Yeah. There's nothing on your systems here that are indicating anything as far as a turnaround is concerned.
You mean a turnaround in the market?
No, in MU.
Not right now, no.
Yeah. So your opinion is basically that it's too early. Wait, basically wait and try to get
My
some
opinion
evidence.
is wait on anything. No one should take a position into earnings right before earnings in a stock unless you know what's going to happen with it. And
Mhm.
knowing that you are in, knowing that you're in something and knowing that something could affect it in the same sector, you have to be aware that you might want to exit your trade if you're up in a trade because something could go against you as well. So, I mean, you have to look every single morning and every single night now to see what's reporting if you're in live positions, whether they're swing trades or long-term investments or options, because
Right.
anything that reports could affect your position, and it's just an active time to trade. Everybody should be focused on when these things report because that's when they're going to get the move. If it is going to do something right, it will do it on the earnings, and if it doesn't do it, then again, it's going to go with the overall market.
Well, the next one up is DDOG, and that has been all over the place as well, like most of these things.
I have no idea what's the symbol for that. I've never traded that in my life.
DDOG, DDOG. And it's gone from 200 bucks down to 119, and it's losing altitude today. So what are you thinking here?
This probably why I've never traded it is because this is only out, looks like the end of 2019. Yeah, I've never traded this in my life, but this ran up, it looks like last year in 2021. I have no idea what they even do.
Yeah. Well,
Cybersecurity of some kind.
yeah, cybersecurity.
Okay.
And some of the cybersecurity stocks have actually done pretty good. So the fact that this one is doing so poorly, might indicate that whatever their product is either being beat by competition or, maybe other people are coming up with a better mousetrap. But there's not much to hold on here. Do you ever like you see how we're right near the low? Do you ever take a shot at things near the low and hope it doesn't break or anything like that? Or
no, because basically, again, then I trade momentum. So
Yeah.
then you're almost like, again, you're betting that the momentum is you're trying to do the reversal at that point in time. And while it might work, there's no indication that it will, because again, I think a lot of traders want to do things that they think that are tricky, but really the way that I trade is really just based on common sense. So don't try to be tricky with things. Just think normal. Like I always say, if you had your last dollar and you gave it to a bum on the street and it was the only dollar that he had and he was going to invest it in a stock, you don't want him to lose that dollar. You're going to tell him to put it in something that's really, really good. Would you tell him to buy Netflix if it was his last dollar? Hell no. Look at what it's done. I mean, if somebody has their last dollar, you want something to be in something that's really, 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 really good. In fact, right now, I mean, I'm hard pressed after today's sell-off to tell you anything that I think strong, except for maybe Tesla. Despite the fact that Tesla sold off with the overall market, this is still one of the strongest things in the market. This has behaved better than almost everything else. And the only reason it sold off again is because the overall market today, it was up on the earnings. Last week, it did gap up. Again, it sold off this day with the market too. But overall, when you look, if you print this chart out and everything else, this stock just looks amazing compared to about a million things, including all of the big
But that break under 950 was kind of like a kick in the rear end, wasn't it? A break under about 950.
But it was only because of the market. If the market hadn't sold off this one, nothing holds up against the market. And again, what is selling? Selling is panic. When panic comes in, it can happen like that. And then when panic starts to come in, it's very hard to lift against it. That's why people shouldn't be buying dips all over the place here, because they're basically buying into fear and panic, which is not the right thing to do. So selling is panic. Panic. Once the panic is lifted, could be a million things. Could be something the Fed says, Russia, Ukraine, this thing, that thing, whatever. But
also,
right
when
now,
the order imbalances are so tremendous, obviously the guys on the bid side drop the bid as far as possible. Once all that volume is filled, if there's not another group who wants to sell, it naturally does bounce back up.
Yeah, but again, I would wait on this, but I mean, this is still strong.
Yeah. Well, the next guy up on deck here is Advanced Micro Devices, or did we didn't do that? No. AMD. Yeah, Tesla had a pretty good break to the downside. There's no doubt.
Yeah, this again is going to report in the next week, I think, too.
Yeah.
Let's look at it.
These stocks all look like broken windows, and people asking you, well, what do you think of that broken window? And I
I know
guess,
because
I guess you better wait till it gets fixed. You know what I mean?
well, that's why people are desperate to go long
Yeah.
because they might have missed the short. They might have missed the short. So they weren't aggressive with the short, missed the short, or took the short late, whatever
Right.
time, 12 o'clock noon today or something. And
Right.
so they missed the short, didn't get the big move in the short, want the big move, think the big move now is long, and therefore want to create that. But again, everything that I do based on the gap is based on institutional money. It doesn't matter how many retail traders want to buy. If the institutions are not buying, then it's not going to lift the stock, the market, or anything else. Again, this had a really nice lift here at the end of 2021, a huge move where it doubled in price. This is still a very strong stock, in my opinion. Yes, it's fallen off with the market and everything else, but really, this is a very, very strong stock as well. Lots of long plays you could have done in this in the fall of 2021. I mean, if you look at where this is, all this did is come down here to where it was a year ago. So of all the things we looked at, again, this is just, back down to where it was around $80, but it did run up to 160. This was in November. That was probably some kind of earnings move in there in the fall. But I still think that this is good, and this could turn around in a dime to the upside with a good earnings report, in my opinion. This is a strong stock. This Tesla, these are strong stocks.
Yeah. And it's a half price deal. It used to be almost 170, it's 885, so half price in bed. Okay. Next one up is silver. Silver was getting to go, and then it gave up the goose here. So SLV, right? It was trying to get going, and then it seemed to give it up here a little bit. What do you think?
These ones, again, they gap every day, basically, because they're trading another market. So, I mean, I don't always trade the SLV or the GLDs, but this is something I know people are always like, buy, get, do it. This and Bitcoin, people are always loving these things. For me, again, I don't think it has that big of a move. And again, the last time it made a new high was more than 10 years ago, back in 2011. So again, I think that this is in a neutral position here. It's not in a downtrend. It's not in an uptrend yet, though. So I don't really think that this is a buy yet. In fact, again, this could turn around. I'd like to see this well over 30 before a good long could come in. Otherwise, it could as very easily fall all the way down to 15 or even 1250 where it was. So this is trying to make a comeback, but it's not there yet.
Yeah, the dollar's strong, and they're trying to get inflation down, and that's maybe two things that's tough for the silver. Next one is Apple, which is down in the aftermarket a little bit, and Thursday they announce. And are we going to start seeing a 140 price on this thing, or what do you think?
I think this is one of the things that's going to end up doing the right thing on earnings. I'm not in any positions and won't take anything into the earnings, but if I had to, look at this and analyze it and see what I think it's going to do, this is probably going to have a nice earnings report. That's my theory on this. It, again, is very strong compared to the market, compared to everything else. Yeah. It did attempt to make new highs in March. It failed, but this is holding up very well. I think that this could be up on the earnings. It might even go to 180 or make a new high. That'll lift the market. It won't lift the market back up to new highs, but this could be the one earnings that ends up turning out good. All the banks were bad. Google was bad. Microsoft is okay so far, but this could actually end up being a decent earnings, and I might even go long it. We'll see. We'll see where it gaps. But I mean, this is one that I'm leaning towards a bullish gap up in the earnings. I'd be shocked if it falls under 150 or even down to 140. But since everything has been bad, I guess nothing's shocking anymore. But this might be it actually does what it's supposed to do. It's a strong company. It's a strong stock, and they're still plugging away.
Where's your red line come in there? That'd be a good little line in the sand. What do you know where that number comes in?
What do you mean red line?
You have a moving average or something going through the chart. It's a red on my screen. It's red. So it comes in there a little bit about like 159. So maybe getting it above 159 would be
to buy it, you mean?
Yeah, to buy it. It would be more.
I think I need to see this really, like, to go long it. You mean on the earnings? If pretend tonight was the earnings or something, I want to see this well over 170. I don't want to see a little tippy toe. Yeah. No, I want to see like boom. I want again.
Yeah.
I want to see.
You want to get on a car that's really moving, not a car that's just starting out.
Yes, that's what momentum is. It's buying. I want to see buying, real buying, strong buying, come in, swoop it up.
All right, let's try VNET. I'm not that familiar with that one. Let's see what it is. VNET. VNET Group. Well, that's not helping me.
This is an ADS. Again, I don't
TP.
trade these things in another market. This also looks like it barely moves. My advice to people is, I don't know why you would be trading this.
Well, they're trading, I think they're
544,
trading it because, you know, in the last year or last couple of years, I guess it's been as high as $35, $40.
Okay.
And so it went, you know, obviously this is a home run derby. In 20, it went from $5 up to 40. Obviously that creates a lot of fans,
Mhm.
and it goes from 40 all the way down to 5. And these people still think it might become something big again. So there's nothing down here momentum wise that's indicating that it's turning around.
Absolutely not. Yeah,
Yeah.
absolutely not. I wouldn't do anything with this at all.
When you get to $5 on a stock, you know, and you buy it, it's kind of like an option. Unless the company goes belly up, you'll own that $5 deal as long as they're in business. And if they can turn it around, like Freeport McMoran did when it was trading at 7 and 8 and 9, then you got something good. But copper is a lot different than whatever the heck these guys are doing, I'm sure.
But again, when you're making decisions about your money, you need to make it work for you. Just throwing it a wing and a hope and a prayer that it could do X, Y, Z is not a good investment when there's so many things you could be putting your money in, so many good trades, so many good investments. Really be very, very.
And this webinar is really about, it's not, you know, this webinar and your approach is not really about long-term investing or trying to pick a bottom. It's about momentum and keeping things on a relatively short leash, and everything else is a conversation, really.
Yeah.
Yeah. Hershey Foods, obviously a great defensive, right?
What is Hershey? What is the symbol for?
HSY. And it's one of the ones that people go to when they want to hide, and the Coca-Cola and Pep and this one. So, but is this thing starting to lose its altitude? Huh?
I have not looked at this in a long time. Jeez.
Yeah. Hey, chocolate's addictive, apparently.
This is a very strong start. Well, this is food. That's why. Yeah. This is a great chart. Yeah. I mean, this is a fabulous chart. I mean, I would want to go short this chart. That's for sure.
Even though it's starting to show cracks in the armor, the overall vibe is still too strong to fool around with it.
Way too strong. It just made a new high a couple of days ago, and nothing else did. Not the market, nothing.
Yeah. The ones you'd like to sell is something that's already kind of turned, has already shown that it's losing altitude, and really you're just trying to jump on it as it accelerates in that direction.
Well, sometimes, but again, I've been shorting the market, and the market's still in an uptrend. So again, I don't need something to be down XYZ to short it. You know, I need to see something in here. This is, to answer your question, no, I don't need something to be selling off umpteen days or months to do it. No, but I can't see strength like this. Look at this. It made a new high on the 21st. That was Thursday. No, this isn't what you want to short. So let's be clear, the market is selling off, but it is absolutely, even today, even tonight, even at 313, even at 312, the market is in an uptrend. This is the market. Look at it. It's a beast. The market's in an uptrend, and we've been shorting. We've been making money. So no, it's just.
Well, it looks like it broke. It looked like it did a pretty good break there at 360.
But it's still in an uptrend.
Yeah. All right, well, let's go to root, whatever the root is. It's only $1.66, so I don't know there's so much you can do. You want to short it at $1.66, hope it goes to $1.32?
No, I think these low flow stocks are very, 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 very risky. And the only way you can make a lot of money in these things is if you take 100,000 shares or 50,000 shares, and then you got to get filled, and then you just got to move, and then you got to get out. Then you move it when you get out. I don't know why people trade these things. These things are very risky. I mean, I know why, because they're cheap. I get
no,
that.
and cheap, and some of them do go from $1.60 up to $15. But again, you're playing a little bit of a lotto here. But you don't. Well, the momentum on this thing, for even though it's a penny stock, is showing a little bit of legs here.
Where?
I don't know. Today was up. Today was up 3.7%. Yeah. Now this is, like I say, it's a penny stock, so you live and die by that sword. If you think
go to Atlantic City and have a night out and gamble and have a great time and have a steak dinner. Don't invest in that. That's
all right. Well, this has been a very strong stock. This next one, and this is LNG, and I've loved this thing for a long time, and it's starting to show some cracks a little bit, but you know, they're involved in natural gas, and natural gas is just a beast. So obviously, this has been a beast as well.
Yeah, and this again, very strong. Look at this. This is a beautiful bar today.
Yeah.
Beautiful bar today. Yeah. Very strong. Nice. If you want to buy something, not the root, this is much better. Even if you can only buy, do odd lots of something, you're better off doing something that's more expensive.
And there's some talk that this fall natural gas will be at 8 or 10 by some people. If that's true, this would probably benefit. Another one would be RRC. You want to throw that up there? Because that's kind of another company in this industry, and it's been doing pretty good too. I wanted to see what that looked like. RRC. Yeah, not too bad, right? Pullback, but
not like the one you just showed me. If
not as good as LNG. No.
No, trying to make a comeback, but not there yet.
Yeah. All right. Well, let's go over to Roku. That used to always hang around 100 and 110. What's it hanging around now?
Yeah, I don't know when this one's out.
ROKU.
This
it used to go to 150, then back to 100, then back up to 150, 100. And now it's probably $30. No, it's right around 91. Yeah.
Yeah. I mean, again, this was almost at 500 at one point, now, and that wasn't even that long ago. That was, again, less than a year ago. And now it's at 91. Yeah. So, again, I know people love to buy low and sell high, but at this point now, there's no indication it's going to go back up to 500. And very well could go lower. I mean, again, you have to wait for the earnings. So this is a late earnings. In fact, I think the earnings on this were just like about a couple of weeks ago for the first quarter. This is a late earnings report. So I would not do anything with this until the earnings. And again, it may be a good short because there's no indication right now that any institutional money is buying this whatsoever at all. And it is a very long way from anything, 300, 250, anything.
Yeah. And the thing is what makes it somewhat intriguing is how far away it is from your longer term moving average. And that over time, sometimes the market will gravitate back towards that average, but over time is a very big statement. Like an oversold thing sometimes goes back towards its mean, but that's a very rough, that's not a momentum thing at all. Okay, Keys, this is a great company, I was told, and it went all the way up to 180, and now it's back down a bit. I mean, do you see something here? Because this thing was doing very good for a long period of time.
Again,
as you can see,
so we've looked at a lot worse than this today. Not as good as Apple or Tesla. Some of the other things we looked at, we've looked at a lot worse. But again, with the market falling this year, it hasn't performed well. Again, but with one good earnings report with a lift, up to 160, 165, this could make a turnaround lickety split. So again, we've seen better things to look at going long, but for now, this is barely hanging on at this point.
Yeah, it's in the tech sector, and tech is basically having a lot of problem with this higher interest rate scenario. GDX is had a good move, and some people think it's pulling back into some really good support around 32 to $35 in this neighborhood. Do you see this as a buy into this neighborhood? Or obviously with your momentum, it's going to look lousy because it's come down, but on a longer term basis at all, do you see anything that could be of value here? Because 32 to 35 seems to be a zone where if it's going to stop, that would be about it.
I think this would be a great buy if it gets finally can hold over 45, 50 even would be great, which isn't that far away from here. Right. Again, I know people like to think about gold and silver and some of these strongholds, but again, these also are affected a lot by markets, and so they'll be very volatile as well. So if you want to have a long-term swing trade in something, this might be good if you can get over 45, hold it, and preferably 50.
Now, you do like to do shorting, and we've run out of names here. So I was going to run a couple of things by you real quick. Some people think that the commodities might be hitting some type of a high this year, and some of the commodity type stocks have really gone up. So I was going to run a couple of different ones by you and see what you think. Is there a shorting opportunity up here? One is in the agricultural area, CF Industries. So the symbol CF.
I think the chart's great. I wouldn't short this. No.
No, you don't see it. You don't see it as unwinding. How about ADM, Archer Daniels Midland?
Again, this situation that has brought some of these things to break out the way that they have. Right. The couple you've talked about, I don't remember them all, but the ones that I've said I liked or whatever, they could keep going and going and going and going and going. Right. Like, no, don't short this. Look at it.
And another one would be Mosaic, MOS. These are all agricultural oriented
Yeah.
stuff.
Again, inflation's probably going to get worse.
Mhm.
Interest rates are going up. All supply chain demand, all of these things, increased prices. These things could go so much more than you even think. Same thing with the oil. We can look at CBX, same thing with oil. No, this is, I mean, these are beautiful, beautiful bullish charts, in my opinion. You should be
so
looking,
these,
people
I
should be
mean,
looking for long
obviously,
entries.
like obviously we see a big break on this market from 80 down to 60. Your opinion is that just a pullback and it's going to go right back up again?
Well, I go long bullish gap. So that's what I'd be looking at here, unless I would be waiting for the earnings. But again, this is something that you'd be looking for a long entry, not a short entry.
And you wouldn't have hit it around 75 when the red bar came up?
To short it?
Yeah. Well, obviously it's gone from 7. If it goes from 80 to 60, that's not a bad
No,
gain.
all the things I would have shorted, I wouldn't have shorted this because again, you know, yes, it fell, the market fell, but there's so many other things out there that would have been better shorts. Like Facebook was a great short, short.
I think at this point, why don't you throw some of your ideas out there and let's find out what goes into your neighborhood, you know?
Well, I'm just saying this was a great short. Of course, this is down with Google tonight. But this has been a great short ever since this failed, which was earlier in this year in the earnings back in February, you know. Right. And then of course, Boeing is out Friday morning. Now this fell obviously today with the market. Boeing is out Friday morning. This will be a gorgeous short if it sets up right on Friday. And again, a lot of people want to go long this. A lot of people want to go long this. A lot of people have been going long this every opportunity. But again, watching the earnings for this, I'm watching them on Friday to look to see if I can get a good short setup in this, because this has a huge, massive room to fall and drop lower if it wants to. But I mentioned the CVX. I haven't looked at this in a couple of days. This probably fell today with the market. But again, oil prices could continue to scream higher. So all of these things, this never quite got up to 180. You know, all of these things could keep going and going and going and going. And that's where it's problematic for traders then, because they don't understand it. And then they think about doing the opposite because I think it can't keep going up or it can't keep going down. Why not? Of course it can. That's the whole idea of momentum. Something is going to keep going until it doesn't. Until it doesn't, you know. And
you're letting the market tell you when the momentum dies. You're not telling the market, you know what I mean? You're waiting for the market to tell you when the momentum has died, not you tell the market type thing.
Well, right now, between now and the next couple of weeks, the market is going to be driven by every single thing that reports that affects the market. Today, there weren't any significant earnings, or last night, that would have affected the market. The market did its own thing today. Tonight, we're selling off because of Google, but then you have Microsoft lifting as well. So I don't know what that means for the gap up in the market tomorrow morning or a gap down. But between now and the end of this week, I mean, Boeing will be affected by the market. It's going to affect the market. Apple's a huge percentage in the QQQs, which is Thursday night, and that'll take us into Friday morning. So right now, everything the market does in the next 2 weeks will be driven by earnings, big companies that affect the market. As far as Russia, Ukraine, yes, we could have some impact from that, but I think that's going to last for weeks and weeks and possibly till the end of the year or the end of the summer. So it'll be a once-off when something happens with that, which we don't know about. And of course, something can happen with COVID too. Something can happen again with COVID too. You never know. I mean, there is news things that could affect the overall market, but right now it's earnings.
With regards to any other, any other stocks that you were kind of looking at?
I'll just tell you what we did today. We did JetBlue today. So this ended up going to the dream target because of the market, but I like to short in the morning, get in and out quick. This had earnings. Here it is. It closed the night before. Boom. Right up here, 1306, gap down in the morning, boom, 1251. We did a quick short in it. I'll bring up the 1 minute chart, and we got in, got out. But again, I said 1150 was a dream target here. It closed at the lows with the market. I did not hold it till there. I like to trade in the morning, get out quick, and I did not call any options or swing trades in this. But the trade we did in the morning here, we got in this quick, got the drop, got out, boom, done. So
and
again,
this is a direct opposite of the theme out there that the reopening stocks like the jets and et cetera are going to go through the roof. And in fact, they're not doing that at all.
Nothing is.
Yeah.
That's the
I'm
whole,
saying, you know,
that's the whole
because they say
thing.
that the airports are crowded, so the airlines are going to do great, but that's not happening really. What about Marriott, MAR, or Hilton, HLT? Are the hotels confirming any type of a boom in travel?
Let's look. This is a good chart. This Marriott's a good chart here. I haven't looked at this and traded this in ages either. This is a nice chart. Yeah, I mean, it's a good chart. Again, hard pressed to want to short something like this. You know, again, a nice long setup in here would be beautiful. I mean, this fell today again with the overall market, but this was at 195 just a couple of days ago. And this stock can move. It can move big time. This is a nice chart, a strong chart. Again, big recovery from the lows at 2020 when it was all
Right.
the way down there at 50 something.
Right.
The price went up almost to 200
Right.
again, but driven by what? Driven by the gaps. So this is, again, here we are, gapped up, rallying, dropped, gapped up, rallied, made new highs, fell, gapped up, gapped up, gapped up, gapped up, gapped up, gapped up. These are all gaps.
Yep.
So again, gaps that you would go long. You would go long this. This is, again, talking about things you'd invest your money in. Again, this could keep going higher as well.
Then this is a reopening. What about cruise line, CCL?
That is a bugaboo that, you know, these have been struggling. Yes, they're back in motion. I see them out from my window. Actually, I see them every other day. They're going again. They're booking cruises, or they're out and about. But I mean, they took such a nosedive. I mean, this was like nothing you'd seen like this in Boeing. I mean, some of these things, again, even with some rallies in here,
Right.
you know, this has to like double or triple in price to be up around again. I mean, it's obvious that this is going to take a long time for this to recover. RCL as well.
And what about Hertz, HTZ, a little rent-a-car stuff?
So, well, the problem has been supply issues with this. So I think that this is trying to make a comeback too. But again, supply issues has been the problem where they don't have enough cars,
Right.
you know?
In
So,
other words, they can't make enough money because they don't have the cars.
yeah.
How about the restaurants like Darden, DRI?
This is a tough one to trade. This is a wily thing to trade. Has big moves, but often very spready. Good chart. Another good chart. Yeah. Food, regular, just, you know, the basics, food, oil, you know, those are the kind of things.
There is one in the food area that's gotten really nailed, but they are trying to figure out what they're doing. And that's in Starbucks, SBUX. Is there a value down here?
Starbucks has gotten pricey and is way too political, and they closed them. Like, they had a store in every corner of New York, and they closed, like, it was a huge market for them, and they closed like 85% of them in 2020. So I think the problem with Starbucks is that overpriced, closed a lot of stores. This doesn't look good. No. In fact, this is probably setting up for a nice short.
Has Chipotle topped out at all? CMG?
I never understood the price of that based on the company.
Yeah.
But we'll look at it here. I mean, this is one of the things.
How many $5 meals do you have to sell to get $1 trillion market cap?
Crazy. But again, you could have said the same thing about Zoom 2 years ago, you know, Peloton too, and they've both collapsed, but this is holding on. I mean, it's really a crazy price for this, but obviously they do a lot of business, and this is still very, very strong. And I think this is something, you know, I would never day trade in my life because of the price point and the spread, but you could do options in this, and it does move. And again, you'll be looking for the next earnings to see how it comes. All of the food stuff, the retailers, all of them are at the end, at the tail end of earnings season. So these will be like at the end of May. We can look at the popular one that everybody loves, that GME, and see if that did anything interesting lately. This is the Reddit stock everybody talks about. This had to pop up, looks like at the end of March. Hasn't gone anywhere since. This is another one where people have their money invested in it, long-term, real money, cash deposits, waiting for it to go back to 300, 400, 500, where they bought it, or almost 500 where it got to. I think the previous high up here when this whole thing happened at the beginning of the Reddit thing was 483. So, I mean, there's so many people that are long this, waiting for it to have a big move up again, but without institutional money, it's never going to get there. So it's kind of interesting. This is almost sidelined here.
Would General Electric be coming up on your radar, GE? Because obviously it yelled out timber today a little bit.
Well, I looked at it this morning. I said you could do that this morning. I chose to do JetBlue. I thought JetBlue was going to set up faster, but this set up quick today too. I did see this morning. This had earnings. This gapped down today. This was a nice short. 80 was the target. It looks like it got there. I didn't do it because we did the JetBlue, but I talked about it and called it in the room. Again, momentum, nice fat big red bar, short, short, short. This closed the night before up here at 89.88. Boom, opened in the morning here 84.95 and sold off like a hotcake. Closed at the lows. Very weak. Yeah, we did look at this morning. This had earnings. I opted to do the JetBlue, but this did work too. Yeah.
Yeah.
Let's look at the market.
UPS said the only reason they made money is they jacked prices up. Their actual total packages are coming down. Does UPS look like it could be turning into a short?
Well, that was earnings too. And again, this was one that was kind of weird because if the market hadn't done what it did today, I don't know what UPS would have done in a normal market day. Again, the market drug everything down today. But we did this a couple of earnings ago. I did not do this today. I didn't like it up and I didn't like it down. And I didn't follow anything that the earnings said. This is still very strong. It's hard to believe though that they're not having employment issues. Again, I think they don't have enough drivers. That's the problem. So they're going to increase prices, but if they don't have enough drivers, people are still ordering packages and buying packages. And obviously they're competing with Amazon, but there's still plenty of business for UPS. I think they have an issue getting enough drivers. So I mean, this is a strong stock, and I didn't touch this today. It had earnings. It was a no play. Sometimes things report earnings and they can gap up and you don't buy them and you don't short them, and you gap down, you don't go long. Sometimes there's no play. There's no play, nothing to do. And
do you ever work with the ETFs? Like IWM is the one-stop shop for small caps, and that's certainly been deteriorating.
I don't look at that, but I will. I look at the Qs and the SPY and the diamonds for the ETFs that I look at. IWM, I'll look at.
Yeah, that's small caps, Russell 2000.
I mean, looks exactly like the overall market, to be honest with you. Looks exactly like the Qs.
Yeah. And it definitely looks like it's trying to hang on for dear life too, huh?
Yeah. The only way the market's going to go back up is if something happens that's going to make people have the conviction to go long again with some sustainability, not a one-day rally like yesterday.
Right.
And the main reason that I've been, going towards the short side with the overall market as well is, we'll see what these things today. The main banks that reported at the beginning of earnings season 2 weeks ago didn't do anything right. So this fell. This has been falling. This is Goldman Sachs. You're not going to have the market, the SPY, at brand new all-time highs while the financials are falling. It's impossible, and it's never going to happen. So the financials did not have good earnings. Not one single one of them did. Not one of them did anything right, and none of them are near the highs. So again, you have Apple as a part of the Qs. You have the financials as a big part of the SPY now with Tesla as well. And why Tesla is strong, and one of the reasons that the SPY has been stronger than the Qs, you don't have the momentum to the upside in the financials. This could turn around. This could turn around. Remember, banks make money lending. So they're not going to be able to lend as much with rising interest rates. So it is problematic for banks because of the fact that rates are going up. And then you also have the possibility that people could default when
well, I mean, home sales are dropping. And Lord knows how much these people put down on their houses. So I think we've already seen the movie. When you put 10% down on your house and it drops 15%, you've got negative equity. And when you have negative equity, people sometimes throw it back into the water.
Right. Well, the housing market is it could be a year, could be 2 years, could be 5 till it comes, the housing market comes to turn around, but the bubble will burst at some point for housing. I don't know when that is. Rising interest rates will help to push that forward faster, despite the fact there's low inventory across the country. I still think that there's a bubble that's going to burst and people overpaid for homes in 2020 and 2021. I think that's starting to drift off now,
Yeah.
but that could be a problem, like you said. But anyways, getting back to the overall market, so this isn't doing anything right here. And again, this already reported. So again, we can look at JPM, another leading bank, but that looks actually worse than this.
No, it really does. Because I mean, I see a lot of branches there, and there's nobody in them. So I feel like they're paying for branches for no reason, you know.
Well, most commercial leases are 10 years, and
I got you. So
they
can't
scale
get out.
back. They scale back employees, and also people are working from home. I don't think people are as productive working from home unless they have a very type A personality, which some people do. But
Right.
the fact is that you got to have the service, to sell the services, people got to be in the branch, and they don't have the employees there anymore. And also many of them are limited hours. So, I mean, banks used to be open all the time, very
Right.
limited, shorter hours now, because again, they can't get the employees. They can't get them back to work. And we're not a functioning society right now by any means, although we're improved since 2020. Society
But
is
it's not
definitely
it's not back to normal by any means. You know,
No.
everything that deals in borrowed money is obviously under a microscope now, obviously because of rates going up, which makes things more expensive when you deal with borrowed money, real estate being one. Another one is buying a car. Let's close out by looking at Ford and GM and see if you see a short there. FNGM. Yeah. That may also have an effect on Tesla because, again, you're dealing in borrowed money when you buy a Tesla.
Teslas are expensive. Not everybody can afford to buy one. Also, the biggest problem with electric cars is they don't have enough places for people to charge them. So
Right.
that is a huge problem to turn the country into to all buy electric cars besides the cost. This
what
had
do
a
you-
nice run up last year. I mean,
Yeah.
again, I'd wait till this has a bit of a jump, but this isn't a bad chart here. This isn't a bad chart at all for it. This has had quite a comeback, actually. Again, the prices of used cars has gone up. Many people that were flocking to, you couldn't get the parts, so they were selling and selling and selling. Used cars were selling at new car prices. It was
Yeah,
nuts.
but
What's
that's
the other
rolled
one?
over since that. That's rolled over since that time.
General Motors here.
That game has come and gone. You know, when you hear used cars are going for more than new, that sounds pretty weird, and weird doesn't last, right?
Everything about the last 2 years is weird.
And so GM, same kind of an idea, losing altitude, but not really a short.
Let me see.
See if it comes up.
I like Ford better.
Yeah.
I like Ford's chart better than this. This is, I mean, this again.
But you don't see these as shorts. You see these as waiting for a pattern to show you to buy something.
These two, yeah, I would.
I got you. All right, we're coming to the top of the hour, Melissa. It's real important now that you repeat exactly how people can get a hold of you. And if you have any special offer, this is a great time to extend it.
Sure, you can email me at melissa@thestockswoosh.com, or you can call me at 929-3200-GAP. You can go follow me on YouTube at The Stock Swoosh. And I am doing a class. I do a class every month, but the class for this weekend, it's kind of late, but it's April 29th and May 1st. If you're interested, you get 1 month free of the trading room and 1 month free of the options newsletter. And it's a good time to trade. And it is a good time to short. And even though I do go long, we do mostly short.
Sure. Well, it's great to have you here. As far as Option Professor is concerned, we have a PDF report on how to hedge against market declines, but also market advances, using replacement trades, collars, and covered writing. So at optionprofessor.com, you can get that PDF report. So jump on there and get it. Melissa, thanks a lot for being here. We'll do this again sometime, and have a great week. And hopefully all your trades will be good ones. I'm going to send it back to David again. Thanks a lot, Melissa.
Thank you. Have a good day.
Okay.
All right. Thanks. Yeah, ton of good info today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app to get instant updates when I post new shows or events. Also, if you just go to TimingResearch.com, you can get access to this recording as soon as I can get it posted. Also, you can scroll back and get any of the past recordings of events and shows as well. So I just want to thank my guests again for today. Melissa Armo of thestockswoosh.com and the Option Professor of optionprofessor.com. Thanks, everyone.